Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at the Lucid Motors chart, ticker symbol LCID, looking at the daily over here as I record this Thursday, February 27th, before the market opens. And so Lucid closed yesterday on Wednesday, the 26th, at a price of $2.25.5, being down over 13.5%, getting a little bit of a bounce, about almost 4% in the pre-market. But as we can see here in the chart, it has come down pretty massively from the recent highs on February 28th at $3.59. It has come down almost 40%. So a pretty massive move there. And unfortunately, the data that I've been looking at does suggest that this will continue down potentially to $1.50, if not lower. So I do think it is good to be prepared for that. And so if you are a Lucid bull, this video may not be for you, but if you're interested looking at the chart, looking at some unusual whales data, options data to inform on what the chart might be doing over here, then maybe this video is not for you. But if you're interested in that data, this is going to be a pretty exciting one. And yeah, I was looking forward to doing this last night, but I actually wanted the data for this morning to get into it. But anyways, I'll go over the unusual whales data towards the end of the video. The first portion will be dedicated to the chart here. And so what we can see, if we do take a little bit of a step back, there was this pretty massive gap down following the close from October 16th, when we closed at a price of $3.28, marked here by this solid blue line. Usually when a gap is formed, I do a dashed blue line, but since this has been filled, when we form this double top over here, I have filled that line, making it solid. And so as we can see, there was a very clear double top there, and it was kind of thinking about it, the high over here of 364, and then the high from February 18th of, let's see, 359. We did put lower highs in there, and with that, it does look like the RSI was also forming lower highs, so no bearish divergence there. And if we do look at the volume spikes around these runs, let's see. I mean, this was on that high day. The volume had come down a pretty good amount following, the recent big volume day. And so with volume diminishing as stock price went higher, that was a little bit of a tell. And then if we look over here, same type of thing. As price was going higher, we had lower volume. And if we do consider, the volume on this high day, that was at 121.82 million shares traded. And then if we look over at the volume from this high, that was 95.55 million shares traded. So a little bit lower. So yeah, I mean, there were some signs that this was a double top, but kind of tough to tell. I am myself just getting better at reading this volume corresponding with what's going on with the chart, and there was a signal that this was a top, but I definitely would not have expected it to come down about 40%, hitting these levels. And I did have some Fibonacci retracements drawn up here, but since we have effectively done a full retracement, I decided to remove them. And so speaking of those full retracements and stuff, I did want to take a bigger step back so we can look at some of these levels. So I do have this yellow line here at right around $2.50. We are below that now, and that is at $2.54, which was the low from January 19th of last year. And yeah, we did get a little bit of a double bottom bounce there. Did effectively come back to retest right around that level before pulling down to it, breaking below. And yeah, then ultimately finding it as support again before going higher. And so, yeah, we did gap down to right around that level. And yeah, effectively, again, did find some support here. It looks like with the 50-day moving average, but then ultimately, as those moving averages converged, broke below them and actually did form some gaps to the downside over here. So I might doodle those up here. It looks like the close on the 21st was 306. Just going to make that a dashed blue line over there. So we know that there is a gap to the upside that does need to be filled. And then again here, the close on the 25th was 261. Lock that into place as a dashed blue gap line. So just so we got those on the chart there, but I do think it will likely be going lower. And you might notice that the current price, at least as far as the close of yesterday goes, 225.5, we are trading below this orange line at 229. That is actually where I had the Fibonacci drawn from, going from the low that was hit on April 23rd of 2024. And then I believe it was going up to this high from August 26th at $4.43. Again, kind of a double top there before massively pulling back. And so from those two levels, I do have this white downtrend drawn, which does suggest further downside. However, this downtrend is based on the lows. And if I do adjust this pivot point here, where that orange line is based on that pivot low from April 23rd, if I do adjust that, I do think that I can get that line to be intersecting over here. That would suggest not such a steep slant. And so maybe that is a level we should be looking to for support, but I'll draw that in just a minute. I'm just going to delete this right there. But I also wanted to throw up, as I did before recording this video, this low of $1.93, which we hit on November 15th. So that is the red line in the sand. And in all honesty, based on the data from Unusual Whales, I do think that the stock price will be going below 193. So do keep that in mind. And it looks like this is all following earnings, which were reported on the 25th. So we got this drawdown leading up to it, and then that downside move continued. And if we do look, as the stock price has been going down, I'm talking about volume over here with the double top, as stock price has been going down, we have seen volume steadily increasing. So that is not so great, suggesting that people are selling this. And this also follows the news of the CEO stepping down. I think it's Peter Rawlinson. I might have his name wrong. Lucid CEO exit more consequential than market thinks, says analyst, with downgrade retail bullishness unshaken though. So, putting out this video, I feel like it will be unpopular. I just, wanted to be going over not only the chart, but also the data, which I'll get into in a minute. And yeah, so I believe Peter Rawlinson, it might just be Rawlings, but I think it's Rawlingson. But anyways, let's talk about the lows over here. 193 did get some consolidation right around $2. And so that is another level to the downside. The low over here, let's see, was $2.25. That's the low from November 6th. And, I am just going to make this a light blue color just because I find that to be soothing. It calms me down a little bit. So 202 right there did act as support. Maybe it will be acting as support again, but I do think that we will be going lower. So I'm just going to take you guys over here to see how I adjust these pivot points to give us a little bit more of a conservative downside target, although this is bugging out a little bit. So yeah, that is locked into place. I'm just going to move this pivot point to, let's see, what was the close on April 16th? Let's see, I need to get that information from here. That was $2.40. So I'm just going to make sure that's $2.40. And then over here, the low from January 19th was $2.54. So I do believe those numbers are correct there. So I'm just going to lock that into place. And so we do have, this open below that line, and actually a little bit of a close below it here on April 22nd. But, it is just an approximate level. I just wanted to bring that up, and we haven't really, and actually, speaking of that, maybe I should adjust it to the close from April 22nd, which was at a price of $2.38. So ever so slightly, I am going to adjust this to that level of 238 marked there. So looking good with that downtrend. And so now let's just see where that goes. Over here, I was wondering if it would intersect with the lows over here, and that just looks beautiful. So we did get an intersection with the low from November 6th that I was just talking about at $2.02. As well as with approximately the close from November 15th, which was at a price of $2.01. So I do think that downtrend has something to it. I did have to, move it around a little bit there, but, just being based on the lows, we can clearly see that it did act as support here. So I think that's a totally valid adjustment. And then moving forward over to here does bring that downtrend up a little bit higher. So, maybe we could be finding some support. Let's see, coming down to maybe 170, 180. That's still further 20% downside move. So do consider that. But the data that I will be going over in Unusual Whales does suggest that this could be coming down to $1.50. So whether it's to $2, $1.80, or $1.50, I think this is going lower, but let's look at the data. And I have not looked at it so far today, so I'm excited to dive into it with you guys. And so what I am going to do, just go into the Unusual Whales website. I'm going to go to contract lookup because that is how I found this chart. And these are all just kind of arbitrary ones that I tend to keep an eye on. And so yesterday I looked at the Lucid data for this $5 call expiring in January. So got almost, a year between now and expiration. This is just one that I was looking at, but I don't think that this is one to buy. Nothing like that. Maybe it's one to sell. But what I was looking at was the data over here. So I'm actually going to expand that so we get it into the bigger picture here. And so what we can see, this is showing us net call and put premium as well as the volume traded. And we can see also the stock price in yellow. So yesterday it does look like we saw a little bit of a bounce in that price, followed by a pretty fast bleed and then kind of consolidation with fading towards the end of the day. And then with the volume, we did see it go up and down, so something to consider there. It does look like, the volume was negative, and I believe actually the volume, I am kind of an idiot. I had always thought that this volume corresponded with the calls and puts, but I think it's actually just with the stock price. So we see that there was some buying as it was pulling back here, but then we just saw further selling, I believe. So anyways, it did end the day pretty negative volume there. But what we see in the premium, if we look at the net call premium, the green line here, it was more or less flat, or at least flat relative to the net put premium in red there, which started the day fairly flat, a little bit of a dip here. And actually with this big drop, that is something that we will look at in the contract data, looking up to see what contract caused that drawdown. And then we later saw this big spike here in that. So the net put premium went from right around 11:11 a.m., went from a net put premium of being negative about almost $200,000 to a spike up to $1.55 million net put premium. So that's a pretty massive jump. And that took place over the span of about 5 minutes. And then over here towards the end of the day, we also saw a pretty massive spike in that net put premium. And so that went up from 1.69 million at around 327 to about 2.78 million. So about a 1 million jump there in that net put premium. And I have to say that looking into the data like we're about to do is very similar to the video that I just put out on the multi-million-dollar trade with SoundHound. And so this is basically what we're looking at here is the beginning of a trade like that rather than the conclusion, which I went over on SoundHound. So I think there is a lot of potential based on this big dip here that we saw when net put premium came down from being positive $224,000 to being negative almost $700,000. So these three big moves, we can look up those contracts to get an idea of what that person, what that trader is doing. And then also, before I get over to the bigger picture data and the contract data for the day, I did want to slide this down so we can see that the bearish bullish slider does have the majority, which is only 44%, but the majority on the bearish side due to this neutral trading here. And so that does make me think that this is ultimately looking bearish. And then before I get into the flow lookup for the day, I did want to expand this to the 30 days so we can see, actually before I do that, sorry, I'm getting ahead of myself, to end the day yesterday on the 26th, we can look over here and see that net put premium increased by $3 million, whereas net call premium increased by less than $4,000. So there's a pretty big difference there. And if we do flip this over to see the past 30 trading days, we can see if a $3 million spike in net put premium was notable, if it did stand out, if it was unusual. And so looking at the 30 days, the past 30 days, going back to January 14th, the highest spikes in either net call or put premium were going back to January 16th when we saw an increase in net put premium of $1.34 million. Otherwise, we have seen some other spikes in net put premium, some calls over here, net put premium again, some dips over here, but only coming down to about negative less than $400,000, about 378 negative put premium there. So this move of $3 million to the upside with that net put premium, that stands out as something I want to be looking into. It does stand out as unusual. So let's open up a new tab, go back to that Unusual Whales website to look up the flow data and get to the flow feed. And since, I'm going to reset this so we start from scratch. And so I'm going to basically bring up what I just had there. And so what I want to do in this filter is I want to adjust the time range to be, let's just clear this and get that time range to be for the 26th, beginning and end. So it's not going to include any data for the 27th, but the market's not open yet. So that does make sense. So just for that one day, I am going to apply it there. Then what I'm going to do is I'm going to filter by ticker and I'm going to type in Lucid Motors there. And it looks like there's no data there, which is perhaps problematic. But I'm just going to type in, let's see, the premium here. And so I have that at $100,000. You can see the cursor right there. It's above Ed's head. Got to make sure he's not blocking it. So the minimum for that premium is, 100 comma right there, $1,000. And I could even, add another zero to this, believe it or not. We have filtered this down to a lot of contracts, but even if I add another zero, we have those three big moves that I showed you. Let's see if I go back to the 1 day, these three moves here. So we can look at those contracts, precisely what happened with them. But we can also, adjust this filter back just for a quick example, but then I will dive into those three contracts. If we look at $100,000, we see a lot of contracts. It looks like what, 1, 2, 3, 4, 5, 6, 7, 9 contracts traded with over $100,000 in that premium. And all of them, except for this one, are puts. Whether that's bullish or bearish, we'll have to look into whether those positions were opened or closed. But, like I said, I'm just going to add this other 0. So we do have, let's see, 3 zeros over here. And then if I just go over here, we do have 1 million there. And so we have these three contracts. Sorry, I'm probably not going to edit this because I got to do pre-market prep. But let's look at these 3 contracts. And so this first one, the first one that we saw, which was at, let's see, a time of about 10:05 in the morning, we can see that in the Lucid data here, right around 10:03, we saw this drop down in that net put premium. And so it looks like the premium on that one was about $2 million. And this is a $2 put that expires in January of 2026. So let's click on that date so we can look at the data over here. And so, yeah, this one is pretty interesting. What we can see, we've got the nice data up here where the premium kind of came lower. We saw some pretty big moves with this one. So initially, we saw $2 million, $2.6 million candle premium at the time of, it looks like, okay, yeah, so this is on the 90 days. Sorry about that. I'm just going to look at the 1 day, getting ahead of myself. So always good to be checking that stuff. I was looking at something around 9 for the full day, and it's like, well, that's not correct. And so here we're looking at the 5-minute candles, and we see this spike from yesterday. Up here it says February 26th. We see this one big spike at between 10:05 to 10:10. So that does correspond with what we see over here. So that makes sense. And so that candle right there, candle premium of $2 million. You can see it in that pop-up box there. And so what we see in the data down here in this table for this $2 put that expires in January, we saw a volume of 41 million contracts traded, with that open interest yesterday being less than 75,000, with $2 million total premium traded. And with that, we don't know if this is buying or selling looking at the chart. But then when we look at the table, I actually need to get Ed out of the way for this so you can see the dates here. So this is for February 26th. Sorry about that. We see that volume of 41,000, open interest below 74,000. Total premium going up by about 2 million. And then we see from that 41,000, that went into an increase in open interest of 40,000 contracts. So going from about 75,000 to about 115,000 contracts open. So I hate to say it, but this is $2 million going bearish on Lucid. Maybe $2 million is not a lot of money to you. It is to me. I can't be making that play, but I do think it is one to be paying attention to. And then, so, like I had it up when I first came over this window, we can then take a step back to look at the past 90 days to see if there were any prior trades that would suggest whether this is entering or exiting a position. And so if I go back to the past 90 days, believe it or not, we do have some big spikes that, I had initially shown, with this one being from October 21st, and that being $2.6 million candle premium, total candle volume of 40,000 contracts, being very similar to this one that we just saw. So pretty interesting there. I was actually thinking that this might be an exit because of this over here, although we saw the premium in yellow going down. So that would be accepting a loss, and that would actually be a bullish thing. Looking at the chart, though, doesn't look so bullish, to be honest. Okay, and so this might just be somebody doubling down on their position. We can also look at this other candle. This is a candle premium of $3.2 million. And yeah, so that volume was actually over 50,000. And so that is what I imagine to be another bearish bet. And then in this table, we can scroll back to those dates of October 21st and October 23rd. So let's just scroll down here to those dates. So prior to October 21st, we had an open interest of about 30,000 contracts. And and so following that trading on the 21st, and this actually goes back further in time, so I can't even get to the older data when this went up from 30,000, so we could actually scroll back. Yeah, I mean, this has changed a lot. So it was initially, it looks like 40,000 open interest, and then so it looks like there was a sell here of about 10,000 contracts on August 12th, and so that was a bullish trade because they exited some of that position. And so then we resided around 30,000 contracts until October 21st when we saw that volume of 40,000 contracts, and then an increase in that put premium of 20,000 contracts, going from about 30 to about 50,000. And then on the 23rd, we saw a volume of 50,000 contracts, and then we saw an increase in that open interest by exactly 20,000 contracts, and the open interest then changing to almost 76,000, and then a further 2,000 addition to put that at around 78,000 contracts open. Scrolling forward to the future, it came down a little bit to around 65,000, 64,000, and then that brings us to February, where we have seen some trading of these contracts, but only in the thousands. It wasn't until yesterday when we saw a trade of tens of thousands, which is buying these puts, which is a bearish thing. So I think that this is likely going down further. And then just to note, the premium for these contracts is around, the low from yesterday to the high was 50 to 65 cents, which each contract represents 100 shares. So that is a buy of $50 to $65, just to clarify that. But I am now going to switch this back to the 1 day so we can look at the other contracts are here. So that was the $2 put that expires in January. We can also look at the $1.50 put that also expires in January. So let's look at that contract. It's what we can see. We saw this alert that went off in the morning. It looks like at a time of between 11:10 and 11:15. So if we do look back over here, that would correspond with this spike that we see, some unusual net put premium activity there. And so looking at that and looking at the table, just like we did before, we can see that the open interest was only 255 contracts, but we set a volume yesterday of over 55,000 contracts. And what did we see with that? Not an increase or a decrease of about 10,000, but an increase of about 55,000 puts. That open interest is now 55.545 thousand contract. So that's pretty massive. That's pretty bearish. And because we had this open interest of only 255 yesterday, if we do expand this to the past 90 days, this is the beginning of a put position. So this is the beginning of what we saw in that video on the multi-million-dollar trade on SoundHound. So this is looking pretty promising. And I don't have to scroll back to any of the history with this one because this is just a massive put position that was just opened, valued at a total premium of nearly $2 million, 1.887. I'm just going to read out the number, sorry, without the points. $1,887,000 and $1 million It's less than 2 million, but it's more than 1.8 million. Let's just put it that way. So this does look pretty bearish. And this premium is actually a little bit cheaper than the other one, with the low from yesterday being about 32 cents, with the high being about 36 cents. So this does have a cheaper entry. So kind of appealing there if you ask me. But I should say I do not have any position in Lucid as of recording this video. But now coming back to here, let's look at this final contract. At the end of the day, it looks like it was in the final hour of trading, we saw another put that was open or closed. We'll have to look at it. Now, this is the $1.50 put that expires in January on the 19th of this year. So we have less than 300 days between now and expiration. So let's click on that one to look at the data for the 1 day from February 26th. So we actually saw, this notable alert here. Volume has exceeded open interest. And so it looks like that was for this contract. And the reason why we see that, it looks like this volume, actually, I'm going to take a step back before I say the reason why. So the candle volume here was 10,000 contracts at the beginning of the day. And I am actually wondering if that was selling initially, because 1050, I'm not really sure. I'm not going to speculate on that. But, so the open interest from yesterday at the start of the day was just over 2,000 contracts. And so with that candle, which is much smaller than this candle over here, that candle volume was 10,000. So that's why there's that alert there. But if we look at the volume for the day, it's 10,000 for this candle and about 50,000 for this one, 50,400. And so this first candle had a premium of about 280,000, $1 less than that, whereas this candle over here had a candle premium of about 1.5 million. And so with the combination of those two candles, about 50,000 here, 10,000 here, we see that the total volume traded yesterday for this contract was 60.5 thousand. And so going from the open interest of 2,000 up to an open interest of over 56,000. So of the 60.5 thousand contracts that were traded yesterday, 54,000 were opened, putting that open interest to 56.499 thousand contracts. And since there were 2,000 in the past, we can take a step back to look at the past 90 days to see what was going on with this one. It looks like back here, let's see, what day was that? On January 24th, we did see a candle volume for that day of 750 contracts. So we do need a little bit more to make up this, 2,000 there. But I don't think I need to go back this far in time, or maybe I need to go back further than 90 days. I just can't do it here with this chart. So let's just cut this. Actually, let's just go back the past 30 days. Do we have that little blip there? That was 750. Yeah, so, these prior positions that were opened or closed were very small compared to what we saw yesterday. So they were not that unusual. What we saw yesterday was definitely very unusual. And so what we can see scrolling down here is we did see, it looks like on January 24th, when we saw the 750 volume, we actually saw that all going into this position, going from an open interest of less than 1,000 contracts to over 1.7 thousand contracts. So all 750 of those went into buying or establishing a position there. And then if we do scroll back in time, the data is really just not that important, because what we just saw was the opening of a massive position. So we don't need to see the possibility of something having been closed in the past or open and being added to it. We just see the open interest going up massively, and the contracts from yesterday range from a low of 24 cents up to a high of 30 cents. So this is also a pretty cheap contract relative to that $2 put. So these $1.50 puts are pretty affordable in my view. And so, I think that they could be a nice way to make a little bit on this as it does go down. And so, yeah, I mean, whether this goes to $1.50, $1, zero, or if it just goes down to $2, the put premium there will be going up as the stock price does go down. So I think this could be a really nice way to hedge if you're long, or I think it could just be a nice way to make a little bit of money riding along, following what this unusual or these unusual whales are doing, betting on Lucid going down. And just to be more graphical about that, we can see that here, these massive moves in net put premium, and over the past 30 days definitely stands out as being very unusual, being very bearish. And so, I am really excited about that. I hope you guys are too. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this and a follow-up when I see more unusual activity on Lucid. Thanks a lot for watching, and have a great day and rest of the week trading. Take care, you guys.